Hello and welcome to Q Prime, and my guest today is Mr. Bharat Puri, who is the managing director at Pidilite. Pidilite came out with its earnings, its top line grew by nearly 12%, but there was margin pressure, and Mr. Puri is here to give us a roundup of what the quarter was. Mr. Puri, take us through. You saw good 12% jump in your sales. Was it all of it a price-led jump, or what was the volume growth like?
See, Sajid, if my invitation to you would be, because we've seen a year where quarters have had disruptions, one time the pandemic, etc., it's far better to look at the performance over a longer period of time, 6 to 12 months. So if you look at the last 12 months, and, March is always a good time to review the year. Overall, we've had a good year. Our overall revenues are up 35%, our volumes are up 20%, and our volumes are up both in the consumer as well as the B2B businesses in excess of 20% each. So at overall level, it's been a good comeback and a good bounce back as we look at the revenue picture. The concern remains input costs. We're in the middle of a perfect storm as far as input costs are concerned. This started about 12 months back, and we're not seeing any respite. The current geopolitical situation vis-a-vis Russia and Ukraine seems to have impacted this even more. You can see where crude prices have gone. And therefore, for any organization right now, the issue, frankly, is not so much about the revenue, but is about managing input costs. We've been very conservative and judicious in passing on price increases. We've only passed on price increases to, about 75% to the extent of inflation. And we've tried to become more efficient, also lower our own margins in the short run, because in our belief in an emerging economy, the single biggest tax that a consumer pays is actually inflation. And therefore, as a responsible organization, the more we can lessen that, the better it is for us.
Sir, in the last 1 year, when this entire issue of raw material cost spiking started, most of the people were of the opinion that it's transient, it will be short-lived, short-term in nature, but it has extended beyond 4 quarters now. Global volatility is also, is putting a question mark on when this entire thing will peak out. What is your thought on this raw material cost? Where is it going to peak out, and how are you riding this perfect storm, which as you call it?
See, right now, my guess, frankly, is as good as yours. After Russia, we'd all thought that starting the first quarter of this year, you will start seeing softening. But the whole Russia-Ukraine situation has actually become the black swan event, which has turned everything back on its head. I think the next 6 months are going to be one of uncertainty as an organization. We will have to manage month to month, quarter to quarter. Hopefully, stability will start returning by the second half of the year. Fortunately, as a branded, consumer company, we have the ability to pass on the price to the consumer, which is what we've done partially last year. And, based on the situation this year, we will take again calibrated pricing decisions while keeping costs tight.
Okay, if you can give us an idea from a yearly perspective, I don't want to put a Q4 number there. On a yearly perspective, what has been the volume growth for you and what has been the pricing growth? You mentioned that you've been only able to pass on 75% of the inflation to the customers. But
if you look at our consumer and bazaar businesses, they've grown about 35% and volumes are up 20%. So therefore, it's all 15 may not be pricing. It may also be mix. But you can say, the price increases in our categories last year have been between 5 and 15%, depending on the category.
Mm-hmm. And how are you seeing the demand pickup happening in urban and rural cities? Because if you look at the FMCG players, they have been crying that rural demand has ebbed, and there's not much demand coming from rural, but there is some kind of demand which is there in urban cities. How are you looking at it? And because you have a good exposure to real estate and construction, are you seeing good pickup happening there as well?
See, there is no doubt about the fact that there is some amount of strain as far as rural and semi-urban India is concerned. I mean, the impact of inflation is clearly being felt, and hopefully a good monsoon and, the government's front-loaded spending will help the second half. Fortunately for our sectors, there are a certain set of tailwinds. As you've rightly said, the real estate sector is seeing some amount of revival. Post the pandemic, consumers want to invest, upgrade a lot more in their homes, and we are seeing the impact of that also as tourism, commercial businesses coming back. So whether it be hotels, restaurants, you're seeing a fair amount of renovation because they've been closed for some time. So we don't have the same kind of demand compression that say FMCGs are facing, but it is clearly much, earlier for us, rural and semi-urban growths were twice urban growths, and now they are at the same level.
And do you see that revival happening in the rural and semi-urban in the next couple of quarters? Do you see some signs of it?
I think as long as money goes in the hand of the consumer, and the money will go in thanks to a good monsoon and hopefully, government spending in these areas which puts money back in the consumer's hand. If that happens, yes.
What about market share here? Because there is always a dilemma for corporate whether to maintain margins or maintain market share. What is your view on that? Are you willing to forego margins as long as you're able to maintain the market share in your market?
See, we're always focused on volume growth over margin. We believe that margin can always come back, but it's volume growth that matters, and therefore, consistent movement forward from a volume perspective in the market, profitable volume growth. And if you look at, like, for example, us over the last 2 years, last 3 years, we believe we would have gained market share, largely because also that the pandemic has advantaged people who have, supply chains which are far more flexible. They have multiple locations, etc. The small and medium sector has tended to suffer more in these circumstances. Similarly, the inflationary situation has the same impact. When you have global inflation, it impacts the smaller players larger. So combination of all of this, I would say we would actually have gained market share actually over the last 24 months.
And on the margin front, because at the end of Q4, your margins had come down by more than 460 basis points. Do you see that recovery in margin coming in anytime soon, given the fact that cost pressures continues to be there, supply constraints are going to be there going forward?
See, we will obviously continue to manage these very carefully. We do not see margins going back to the upper end of the range. They will stay at the lower end of the range. But we will be focusing on profitable volume growth. And hopefully that will anyway also impact margins at the bottom end.
Because if your margins get compressed, your profitability also gets impacted in that sense. That's why I'm asking you.
In my view, the margins should not get, unless these days there is another black swan event. Leaving that aside, frankly, I don't think margins will get compressed more.
How are you handling so many black swan events at your end?
See, this is what makes life exciting, and this is where, as an organization, you have to keep adapting quickly. So, it's part and parcel of the game. It's all part of good learning.
Do you see, some bit of, demand compression happening because of the inflation situation, which is now, going almost close to 8%, and RBI tightening interest rates, which may impact some of the new home buys or home renovation may happen?
There is no doubt about the fact that in any emerging economy, inflation will impact demand. Past experience shows us that whenever there have been periods of high inflation, volume demand gets impacted. And therefore, as an organization, which is why I'm saying we want to be conservative, keep focusing on the volumes, because that's what endures. Otherwise, you will have fairly pricing-led growth, but no volume growth.
Mm-hmm. How are you handling the input cost volatility? Are you very well hedged for this volatility, or you're taking it as it comes?
No, we normally do some amount of hedging, especially on the foreign exchange front, so on and so forth, etc. But otherwise, given our volumes and given our relationships, we tend to, in these periods, over-index those whenever there is supply shortages or volatility.
And what about supply constraints, chain? Because that's also been constrained for the last couple of quarters. Many of the companies are facing that heat. Freight rates are going up. How are you handling that kind of cost structure?
See, you have to keep building it into your costs, managing, understanding, and decide what of it is permanent, which of it is temporary, and which of it can be addressed. And it's a constant process. But I mean, all of this goes back into increasing your overall input cost picture.
And so, if you look at your entire portfolio and the kind of headwinds which you're facing with respect to input costs, supply chain, there are other inflation which may impact demand going forward. Um, which are the things which will help you? Uh, how do I put it? Which are the factors which you can easily pass on to the customer because of the increase? Which are the things which can you hold on for now, and maybe it's a short term in nature, so you don't want to pass it on.
See, anything that we believe is more permanent and is a new normal, we will look at passing on, because then that becomes a new reality. Wherever we believe it is temporary and short term and is a one-off, we will try and absorb.
But Mr. Puri, we started off last year saying that okay, this cost of increase in raw material is a temporary phenomenon, but it ended up for more than 4 quarters, and now is maybe going for another 3 more quarters. So it's a delay. It may be a dilemma for you how to decide which one is short term and what is long term.
I think that's absolutely well put, and it's you will have to keep exercising your judgment, Sajid, and making sure that it's better to be conservative and get it wrong once, but then get it right the next quarter, rather than pass it on and then have to unravel everything later.
From the product point of view, what are the kind of product expansions that you're looking in the coming FY23?
See, what we've done is we've also used this period to actually make our supply chain much more agile and resilient. So as we speak, in the last 2 years, we've expanded or put up 10 new facilities. In addition to these 10, as we speak, we have 12 more facilities under construction. So in many ways, we're getting ready for the next phase of growth. We're also making sure that we are positioned where the consumer is. We've also we've invested significantly in digital. Today, all our salespeople, all our distributor force are now, linked digitally with us. So we've used a lot of this to strengthen the organization, make our investments. Our new categories, if you look at the success of, we acquired Araldite 2 years ago. We've beaten the acquisition case by a long distance. Araldite is now a 500 crore brand. If you look at our performance vis-a-vis the other pioneer categories, whether it's premium wood finishes, you will see consistent movement forward, because really our objective is focus on what is in our control and make sure we keep strengthening that, because when the situation returns, you should be in the best position to take advantage of it.
What about diversification of categories? Because you have entered into some of the categories where your competitors like Asian Paints are there, and they are entering into a category where you are there as part of the diversification of the portfolio. How are you seeing that as one of the strategies for you?
See, we are very clear. We divide our categories into 3 categories, what we call core, growth, and pioneer categories. Core is those where we already have a market leading position and our job is to grow the category. Growth are those categories where we compete against non-consumption, things like waterproofing, so on and so forth, and our job is to create the category. And pioneer is very simply tomorrow's growth categories. Now, when we look at our portfolio, 5 years back, we were 75% core and 25% growth in pioneer. We're now 66-33. In the next 3 to 5 years, we want to make it 50-50. So on a consistent basis, you will keep seeing us enter new categories, do new stuff.
What is the new product profile that you may be entering as part of your growth and pioneer?
See, for example, you would have seen in pioneer, we've pioneered the whole use of tile adhesives. That has now become an area for us. We acquired the leading marble glue company called 10X, which is an Italian company. We acquired their Indian operations. That's another area for us. We've put up a new plant for epoxy grouts, which is another growth. So like this, we have a whole growth and pioneer program. There is flooring, which is another area. Flooring adhesives is another area. So therefore, you will see Pidilite always look, every year you will see us enter at least 2 to 3 new areas.
And that could be the big growth drivers for you. And are these businesses, new areas, be also high margin business for you?
See, overall, whenever we look at any new businesses, these must be profitable businesses. We don't enter the commodity and we only go into value added businesses. So over a period of time, yes, they have to be, meeting our margin profile.
And you see this margin profile as of now, which is around 16%, inching up to 20 odd percent in the next couple of quarters?
See, it all depends on the raw material situation. Very difficult to say currently.
So any cooling down of raw material prices will immediately help you scale up that margin, right?
Absolutely. Yeah, absolutely. Yes.
Mr. Puri, it's been a pleasure talking to you today. Thank you very much for joining us on BQ Prime.
Thank you so much, Sanjit. Thank you so much.
Thank you. Bye.